Hi guys, welcome back. This will be video number 2 from the Eastern Cape Prelim paper for the year 2023. We have looked at adjustment number 1, number 3, and we have also looked at adjustment number 4. So we're going to look at adjustment number 5 now. Adjustment number 5 reads, rent is received for the period 1st of July. Now guys, I want to encourage you, please, when you read such adjustments, your timeline has to be in mind. You have to remember your timeline. Remember, we spoke about it earlier on. All right. So our financial year, remember, it is ending on the 30th of June. This is where it's ending, 30th of June 2023. Be careful of the dates. I've seen in 1 year where the financial year ends on the end of March, like the 31st of March. So you need to be very careful. I've seen another one again, which ends on the 31st of December. So don't always assume that your financial year is going to end on the 28th of February. The examiner can play and change these dates as they see fit. So please be very watchful of this. So in this case, it's ending on the 30th of June in the year 2023. Remember, we said it would have begun on the 1st of July 2022. So remember, this is our 12-month period. The adjustment here reads, rent is received from the 1st of July 2022, which is from here, and then up to 30 September 2023. So it goes beyond June, up until 30 September 2023. Already you can see that we have received rent in advance in this case. This takes into account an increase. Now, the examiner can play around with this adjustment. They can bring an increase, but the examiner can also bring a decrease. Please watch out for that. It can either be an increase or it can be a decrease. Or the examiner can bring the same adjustment of rent, but now with a percentage increase or a percentage decrease. So as you're preparing, please look for such adjustments and do them. But in this series of videos, I'm going to do one as well as we're going. Before we write our final examinations, you should get one video with such an adjustment. All right, so when we then look at this, it then says it has increased by 800 per month from the 1st of April. That means we have to come to the 1st of April. Here is the 1st of April here. 1st of April 2023. Rent has increased. So from April until 30 September, rent has increased. By how much has it increased by? It has increased by 800. So you have to say that 800, which is the increase on the rent, multiply that by the number of months. How many months do we have here then? So if you're counting from here until there, you see that your months are how many? You have to use your fingers. I want to encourage you to use your fingers in the exam. So you're actually saying April because it's the 1st. So you're going to say April, May, June, July, August, September. Okay? So September becomes the 6th month. So the 800 increased for 6 months. If you then punch that on your calculator, you are now saying 800 multiply by 6. All right? How much do you then get? If you don't have a calculator, let's see if we can do that together here. Okay. So you are now going to say your 800 multiply that by 6, and then you get 4,800. Okay. So the increase in total is 4,800, which is what we see here. But then in our rent income, how much had we received? We had received 168,000. So here we have 168,000 here, which is our total rent income that we have received. However, 4,800 is the increase. How much then is the rent before that increase? Let's come here, and then we are now going to say 168,000. This is 168,000. Then we minus that 4,800. How much was it before the increase? It was 163,200. So here I have 163,200. This is for how many months? The total months here. Remember, it is 12 plus these other extra months. How many extra months? It is July, August, September. So it's 3 extra months. 12 plus 3, the total becomes 15. So you're dividing this by 15 months. Let's see how much we get if we divide that by 15. We then get 10,880. This is rent per month before the increase. Then we now want to get the rent after increase, remember, because these months in question here are after increase. So we have to come and add that particular increase, and the increase is 800. So it becomes 10,880 plus our increase of 800 per month. Then we have 11,680. I have 11,680. This is now rent per month after increase. How many months have increased in this case? Remember, our problem is 3 months. So we multiply this by 3. How much does it then become? The amount becomes 35,040. So I'm going to come here. Then it becomes 35,040. This is my adjustment. And that 35,040 must be adjusted in the income statement and in the balance sheet. Remember, we are doing the correct net profit calculation. So if I have 35,040, which is income that I've received in advance, I would therefore come to my correct net profit adjustment calculation rather. Remember, it is income that we've received in advance. So if I were showing the calculation, I would have said it was 11,680 per month times the 3 months. So here I'll end up with 35,040. This is income that was received in advance. Therefore, it overstated our net profit here. Our net profit was overstated because there is income that we have recorded in advance. So what do we then do? We come and then we say minus, because we are doing the correct net profit calculation. Remember, you are also doing the statement of financial position. So that means you come down here and you are now saying, if I've received income in advance, where does it go? Trade and other payables. So I'm going to come here, then I'll say plus 35,040. All right, so please prepare for the exam. You must be able to do the adjustments in the income statement as well as in the balance sheet. Okay, let's see if I can do adjustment number 6 before I stop this video. Number 6 then reads, a creditor with a debit balance of 11,000 must be transferred to the debtor's ledger. Okay, so I want to show you again. In your mind, it becomes easy if you keep your ledger accounts. Here is the first ledger account. All right, so here's my first ledger account, and I'm going to have my second ledger account. In my second ledger account, the first ledger account, let's call it the creditors ledger. All right, and then here we're going to have the debtors ledger. The creditors ledger, remember, liability. So on the credit side, it's a plus. On the debit side, it's a minus. But in the debtors ledger, an asset. On the debit side, a plus. On the credit side, a minus. And we're told a creditor with a debit balance. So I'm coming here. I have a creditor with a debit balance of how much? 11,000. Must be transferred. So we want to transfer this 11,000. To transfer it, I'll come and record the 11,000 on the credit side like that. And then to complete double entry, I'm going to come here and I'm going to have 11,000 here. Then I have transferred the debit balance in the creditors ledger to the debtors ledger over here. What does that mean? It means I have to go to my trade and other payables and say plus. Then I go to my trade and other receivables and say plus. So let's do that. That means I'm going to come here now. In my statement of financial position in trade and other receivables, remember, we said we're going to come and we're going to say plus 11,000, trade and other receivables, plus 11,000. Then we're going to come to trade and other payables plus 11,000. That is what we have done when we look at this adjustment. But the examiner can bring it in any way. What if the examiner comes and says a creditor with a credit balance must be transferred to the debtor's ledger? Still, draw up your ledger accounts and then you put the balance where the examiner is saying you must put it. Transferring it means you put it on the opposite of that amount. Then you take it again to the opposite of the other account, which would be your debtor's ledger in this case. All right, I'm going to quickly see if I can do adjustment number 7 before I close this video. Number 7 is very exciting because it's one of the many loan adjustments that we're going to be doing as we are approaching the 16th. It reads, information from the loan statement received from GoviBank, monthly repayments, keyword, monthly repayments. That means monthly we are paying 45,000 monthly. That means per year, how much are we going to pay? Because we are paying 45,000 monthly. So in this year, that means we have paid 540,000. Please stay with me. It then says, interest on the loan is capitalized. The balance on 30 June, so this is the balance at the end. Did we have a balance at the beginning? All right, here is our balance at the beginning of the loan. So if I take my balance at the beginning, which is my 3,985,000, then I subtract my balance at the end, which I have been given here to be 3,755,000. If I take the difference between these two, all right, how much do I get? Let's do it together. It's good when we do it together. All right, so I have my 3,985,000. And if I subtract my 3,755,000, I will get 230,000. That means on the loan this year, we have paid 230,000. You still following me? Okay. Then they say, the current portion of the loan will be increased. The current portion of the loan will be increased by 70,000 in the next financial year. That means on our loan this year, we paid 230. Next year, we're going to increase it. To increase means we add. We're going to increase it by 70,000. That means next year our loan is going to be 300,000. When we look at this, we are able to attempt our statement of financial position as well as our correct net profit calculation. Let's start in the correct net profit calculation. This year we have paid 540 in total. But remember, interest is capitalized. That simply means in the 540 we have two amounts. Number one, we have interest. Number two, we have the loan. But we have the loan already, which is 230. So if the loan is 230, yet we paid 540, how much was the interest? 540 minus 230. That gives you 310,000. 310,000. That becomes the interest. As simple as that. So it means we now come to our answer book. Then we are now saying, in the correct net profit calculation, for my interest on loan, I will record 310,000. Remember, how did we get 310,000? I'll remind you. We simply said our 540, which is the 45,000 monthly, we got 540, then we subtract what we have paid on the loan, which is the 230. So in other words, I can show calculation and I will say 540 minus my loan repayment, which is 230. Remember this one, 230. So minus the 230, minus the 230, minus the 230, that is going to give me 310. There were other several ways in which you could have done this. Several other ways that you could have done that. Okay, let's quickly come now to the balance sheet. In the balance sheet we'll come, then we'll say loan. How much is the loan? We take the loan at the end, which is 3,755,000. Then I will subtract what I will be paying in the next financial year, which is how much now? 300,000. So I'll come in, then I'll say minus my 300,000. And then here I'm going to have my short-term loan. And my short-term loan is 300,000. So this one, you can simply calculate and get that one in there. Okay. I hope this makes sense to you, especially what we did over here. Monthly repayments for 12 months, 540. Interest is capitalized. That means there are two amounts in here, interest and the loan. We got the loan by taking the difference between the balance at the beginning and the balance at the end. That shows that this year we paid 230. Then we now say the total payments for the year minus the loan. That gives us the interest. And then 70,000 is an increase for the next year's payment on the loan. And then we brought it to our statement of financial position. Okay, I'm going to end this video. Another one is coming. Please wait for it.